Hi there, welcome to Kneppy Invest. A viewer request video today looking at a company called SRG Global, focusing on their financial year 22 results. I have been following this company for a few years and we'll have a look at the chart. And the main reason I started following SRG Global was because of the share price moving into an uptrend. However, the true form of SRG Global came to fruition in 2018 when there was a merger between two other companies called Global Construction Services, or GCS, and SRG. Now, under this agreed merger between these two companies, SRG shareholders would receive 2.479 GCS shares per SRG share, with GCS acquiring all SRG shares on issue. Now, that new entity, this new merger, would be named SRG Global, which is what it's named today, with GCS shareholders owning 51% of the company, while SRG shareholders owning the remaining 49%. So this was almost a true merger between two equal entities, and that is SRG Global that we know today. Well, you might not know it, but I know it a little bit. Now, what exactly does SRG Global actually do? Well, this company actually has three segments, and probably before I started knowing this company a little bit more, I would have called SRG Global a mining services company, but that is one of their segments. The other two segments are asset maintenance and engineering and construction. So they're not a pure mining services company. But whenever I see a mining services company or even an engineering and construction company, I know there's going to be low margins, particularly in engineering and construction. No idea about asset maintenance. So later in this video, I'm going to look at the three segments, look at the amount of revenue that comes out of these three segments, also have a look at the EBITDA and EBITDA margins, just to see the particular margins that these three segments actually produce for SRG Global. Now, how would I define the quality of this company right now? Now, if you look at the long-term chart, which we'll see in a few slides, I probably would define SRG Global as a lower quality company. Now, for the very fact that they do business within the mining services, engineering, construction, and even the asset maintenance, even though I do not know a lot about the asset maintenance sort of area, I probably would define SRG Global as a low quality company. So it all comes back to the cycle. Where are we in the cycle in regards to mining and also in regards to construction? And when you do look at the long-term chart, you'll see the share price of this company hasn't been going up from the bottom left to the top right. And that is one of the determinants I use to come to the realization or determination whether a company is high or low quality. So if I do consider SRG Global to be a low quality company, it all comes back to the share price and whether the share price is in an uptrend or a downtrend, and the value of the company is of less importance. For full disclosure purposes, I am not a shareholder of this company right now. I have been following the fortunes of SRG Global for about a year, and the share price is in an uptrend. So I have been thinking about taking a position in this company in the past. I've been very close to taking a position, but I have not hit that trigger, that buy button, and have taken a position in this company. So I am not a shareholder right now. If we take a look at the long-term chart for SRG Global, now for SRG Global, the chart really begins in 2018 when that merger went through. Before 2018, this was just SRG. So if we look at the last 10 years for SRG and then SRG Global, this is not the sort of chart you would find for a high quality company, which is going from the bottom left to the top right. In fact, the share price right now for SRG Global is lower than the share price for SRG 10 years ago. And that's not what you want to see if you're holding a company for a 10-year period. You want to see the share price significantly higher than it is now, unless you're only in that company for the income. Now, there are periods of time when the share price is in an uptrend, and there's also a period of time when the share price is in long-term downtrends. So from about 2012 to 2016, the share price of SRG was in a downtrend. And from about 2000 or towards the end of 2021 into where we are right now, the share price of SRG Global is in an uptrend. Now, the question is, how long can that uptrend continue? It could continue for a while yet, but the main reason I'd think about buying into SRG Global is to take advantage of that uptrend. And because I would consider this company to be a lower quality company, I'll be looking forward or looking for any signs that this uptrend is coming to an end. Now let's have a look at the financial year 22 results for SRG Global. Now, the share price of 68 cents. The markup cap of this company is about $310 million, which is fairly similar to when this merger did come to fruition back in 2018. So when you do go back to 2018, the share price has not changed all that much. Now, in financial year 22, revenue for this company was 644.2 million, profit of only 20.1. So straight away, you can see that on fairly high revenue, there's not much profit. So we straight away know this company doesn't have fairly high margins. Operating cash flow 61.1 million and free cash flow 44.8 million. Main reason why operating cash flow and free cash flow are higher than profit would be because of depreciation, amortization, and also because of capital expenditure. Now let's have a look at the total revenue for this company and operating margins over the past 10 years. And you'll notice a massive jump in revenue between 2018 and 2019. So that's when this company went under that merger. So all of a sudden, this company did become successful, growing the revenue from 239 million to 493 million. It was because of the merger. But since that merger, things are going well for SRG Global. Revenue have increased from 493 million to 646 million. Not only that, operating margins have increased from about 1.5% to current operating margins of 4.6%. Now, going back previous to 2018, SRG also had margins around about 4.4 to 4.8% at their high or at the high point. The also thing you'll notice, when this company was just SRG, revenue was dropping between 2012 to 2016. The reason revenue dropped between those years was because, more than likely, in 2016, we did see the bottom of the iron ore cycle. So there was a possibility that SRG was dependent on iron ore prices, and then we started to see SRG revenue starting to increase after 2016, which would also sort of confirm that maybe this company was benefiting from the increasing in iron ore prices. Now, one thing I do calculate and look at is not the revenue growth, it's revenue per share growth. And over the last 10 years, the revenue per share growth of SRG, which turned into SRG Global, has been increasing at 0.6% per year. Over the past 5 years, 5.8%. And over the last 3 years, when this company has only been SRG Global, revenue has been growing at 6.1% per year. Now, one thing I wanted to know about SRG Global, since they have 3 distinct segments, is the derivation of their revenue in relation to these 3 segments. Is there one segment that derives most of the revenue? Is there one segment that derives very little? And also, I want to know about the margins in each of these 3 segments. And fortunately, most companies will provide this sort of information in their financial statements, and a lot of companies will provide this sort of information in their presentation. So have a look at that and have a look at their financial statements. Usually this sort of information is in the notes. So this is the notes, segment revenues and results. And we can see what the breakdown in revenue for each of these segments. Asset maintenance, 214.8 million in 2022, mining services 114 million, and engineering construction 315 million. So by revenue, engineering and construction is their largest segment. But if we break it down into EBITDA, we can see there's an even split between these 3 segments. In fact, asset maintenance, $25.2 million of EBITDA, mining services, 23.9 million, and engineering and construction, 22.8 million. So nice, evenly distribution between those 3 segments. But if we look at the EBITDA margins, by far, the best EBITDA margins is in mining services compared to engineering construction and asset maintenance. So even though mining services only had $114 million of revenue, they had $23.9 million of EBITDA, while engineering construction had almost 3 times the amount of revenue, yet the EBITDA was lower than mining services. So for SRG Global, their mining services segment has the higher margins. Now, this is only EBITDA margins. So let's have a look at what mining services segment actually entails. So their mining services segment includes ground solutions, production drilling, ground and slope stabilization, design engineering and monitoring services, and contracts vary in length from short to long term. The engineering construction segment consists of supplying integrated products and services to customers in the construction of complex infrastructure. So talking about bridges, dams, office towers, high-rise apartments, shopping centers, hotels, car parks, recreational buildings, and hospitals. Now, one thing I found over the last 10 years as being an investor is margins in constructions is very low. You can find higher margins in mining services. So that seems to be true for SRG Global. While asset maintenance margins seems to be in between mining services and engineering construction. And for the asset maintenance, which is really interesting because I don't know many other companies that provide asset maintenance. So let's just define or see what asset maintenance is for SRG Global. So their operations in asset maintenance segments consists of supplying integrated services to customers across the entire asset life cycle. They provide services across multiple sectors, including oil and gas, energy, major infrastructure, offshore, mining, power generation, water treatment plants, commissioning, decommissioning, shutdowns, and civil works. Contracts vary in length from short to long term. Now let's have a look at the valuation metrics for SRG Global. And this becomes an important step if you consider SRG Global to be a high quality company. And if you do, and you see some value here, that's when you might consider taking a position in this company or adding to your position. If you thought SRG Global was a high quality company, the trend in the share price might be of much smaller importance. So the PE ratio of SRG Global is 15.4, which doesn't seem too high, doesn't seem too low. In fact, for this type of company, I probably would expect the PE ratio to be a little bit lower. In fact, for some of these type of companies, mining services company, construction companies, I would probably expect PE ratio to be less than 10. Price to sales ratio is 0.48, which is not surprising because of the low margins in these sort of companies. In fact, for a lot of construction companies, you'll see revenue higher than or greater than a couple of $1 billion, yet their profit might be less than $50 million. So, and the reason behind that is very low margins in construction type companies, even mining services companies, and apparently even asset maintenance companies. Price to operating cash flow, not surprising, that is significantly lower than PE ratio, 5.1. And the main reason there is a discrepancy between profit and operating cash flow is because of depreciation, amortization, and if you are looking at free cash flow, because of capital expenditure. Now, I did a reverse DCF. So I looked at the operating cash flow, and to justify the current valuation, operating cash flow would have to drop minus 2.9% per year to justify the current valuation. So right now, you might be saying there might be some value in this company right now, because if this company grows over the next 10 years, this company is undervalued. You have to actually decrease the operating cash flow to justify the current valuation. Now to the outlook for SRG Global, and nothing out of the ordinary here apart from one little thing that I did find intriguing. So they're actually a little bit bullish here. So they're talking about mining services operating in high demand, high quality growth commodities, engineering construction, positively linked to significant infrastructure investment, asset maintenance delivering step change growth to diverse sectors in blue chip clients, and they're gaining momentum, or the engineered products are gaining momentum domestically and internationally. They've also given an outlook for their or a guidance for their EBITDA, and EBITDA for financial year 23 is expected to grow or be 25% higher than financial year 22. So if they can achieve that sort of growth in their EBITDA, continual growth in their revenue, continual growth in their profit, this company might be looking cheap at current valuations. Seems like maybe the market has come to the same conclusion as me, because the share price is in an uptrend right now. So even though the overall market is in a downtrend, SRG Global share price is an uptrend. And that's exactly what you want to see for companies in your portfolio. And really, the breakout for SRG Global in the share price occurred in February of this year. And it seems like it coincided with the release of the half-year results because we saw increasing volume and the share price started to go up. Share price moved into an uptrend and the share price has kept on climbing from that breakout in February. And that breakout occurred at the share price around about 45 to 50 cents. Current share price is only around about 69 to 70 cents. So even though the share price is in an uptrend, it's not moving rapidly higher. And you see long periods of time when the share price is only going sideways. In fact, I probably would argue the share price has been going sideways over the past 3 to 4 months for SRG Global. And if the share price moved above about 75 cents, that would be confirmation that the uptrend in the share price is continuing. So if this company can hit their financial year 23 guidance, I think there is a possibility and a strong possibility the share price of this company will be higher than it is right now. I plan to continue doing these financial year 22 result videos or series for a while yet. And the next 5 companies I'll be focusing on include Wesfarmers, Hansen Technologies, Myer, Fortescue, and Domino's Pizzas. If you do have a suggestion of a company, just like SRG Global, that you would like me to do a video on, just leave that suggestion in the comment section of this video. That's all I have for this video, looking at SRG Global's financial year 22 results. An intriguing company. And even though I do think this company is a lower quality company, things are moving in the right direction for this company. The question I have is how long can they be moving in the right direction for? Maybe a year, 2 years, 5 years, but I don't think for a very long time. I don't think for 10 years. I think there will be periods during the next 10 years where this company will be facing some headwinds and some serious headwinds, possibly at that. If you do have any questions, any thoughts about SRG Global, if you think this is a high quality company and I have it completely wrong, please leave up your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.